Hi, GV Subramaniam here. I published my small case products in the trade name of GVSR Wealth. Okay, just to give you a profile update, I am Bangalore Finance Specialization. I've got about 25 years of business consulting experience in firms like PricewaterhouseCoopers, etc., wherein I worked at executive director level. So that gives me a lot of understanding into various sectors and segments of Indian economy. Today I'm going to take you through the highlights of GVSR Pharma sector small case product that is running for the past 2 years now. Okay, at the outset, there are a lot of advantages or certain factors that drive the demand for pharma sector. I'll just present the case for you, business case. It is for you to evaluate based on your risk profile and risk capacity, etc. And number one, there are only largely there are two sectors which are considered evergreen in Indian economy from a demand perspective or a revenue perspective for the companies. One is, of course, obviously the government sector, which spends money and gives business to private sector, irrespective of whether the economy is up or down. Okay. Similarly, the second sector is pharma sector, which is not so much dependent on economy per se, but general well-being of the citizens of the country and the world at large. So for example, which means even in cases of downturn, sometimes there could be specific demand for pharma companies, like we have seen in COVID times. For example, some vaccine manufacturing companies, the demand was simply great. So that is one key factor to be considered in evaluating the attractiveness of pharma sector. Second one is India has certain strengths in the global pharma space. For example, 50% of global vaccines are manufactured in India. 40% of US generics market is captured by India. 25% of UK generics market is captured by India. So India has achieved a critical mass with respect to its global competitiveness. So that is not going to go away just because some new tariffs are imposed on Indian pharma sector by Trump administration or anything like that. It's very, very difficult for US companies to start manufacturing generics because we have a significant cost advantage, the arbitrage with us. So businesses are very shrewd, and to maintain their profitability, they may continue to source from India. And that too, whatever Trump recently has imposed doesn't apply to all types of generic medicines and all. It is only to certain category of medicines and things like that. This is an evergreen sector, and we have a good market entry in the global space. Most important factor that I would consider in looking the attractiveness of this sector is the value upgradation by Indian generics to the patented drugs. This is not going to happen overnight, but it will happen through technology tie-ups. Like we have R&D tie-ups with several leading MNCs, from across the world in India. We may see the same trend even with respect to drug discovery, commercialization of technologies in the pharma space and all that stuff in the coming decades. So that way it will only improve the competitiveness and the revenue generating potential of the sector as a whole. So that's going to be intact. So these factors you need to consider in evaluating your potential investments into this sector. One important thing to note is this is a thematic small case. So there will be periods of underperformance and periods of overperformance. So people need to have patience, particularly when the stocks are in correction mode. The correction may be little longer than the normal case, as you would have seen in other domestic sectors, because there are a lot of approval processes for all these drugs to be approved by FDA, particularly in the export segment, and that so you apply for a license to sell particular drug in US market, it is a huge cycle time. So there will be so when there is a massive momentum, suddenly you will see significant momentum in the share price. Once that revenues which are potentially available for these companies is over, the window closes, then again there will be a lull. So you need to have patience in investing matters in thematic sector pro forma like that. Otherwise, the outlook for the sector on longer time frames remains very attractive. Of course, stock specific level, we have been careful in rebalancing it from time to time. My rebalance style is to shift away from stocks to gold ETFs and liquid funds when the stocks have run up too far ahead of their earnings growth, and then increase the weightage back to equity when the valuations it's fairly valued, so to say. It's based on our own internal assessment. Liquid funds are used as a balancer, which are more like overnight bond funds. And then gold also is used, gold ETFs are used as a tool to rebalance from equity to other asset classes, debt and gold ETFs, and vice versa. So that is my rebalance style. Rebalance is done on a need basis and not on a every monthly or quarterly basis, because we allow the winning horses to run rather than unnecessarily rebalancing them at any given interval. Okay, so it's an opportunistic play. The whole idea is to generate that alpha that you are all looking for from managers like us. Thank you so much for hearing me out. I'll see you on the other side. Do your own analysis based on your risk profile. Past performance is no guarantee of future returns. Being a SEBI registered research analyst doesn't guarantee any level of return. So all those disclaimers apply as stated on our website. Thank you so much.